Today, we're diving into a fascinating case study, Palantir. This is the story of how a super-secretive data company built a massive, multi-hundred-billion-dollar empire using a business model that, honestly, everyone thought was a dead end. They just completely zigged when the rest of the AI world zagged, and we're going to break down exactly how they pulled it off.
So let's just kick things off with this number, 127%. What in the world could that mean for a software company? Is it their growth? Is it their profit margin? I mean, it seems just way too high for either one, right? Well, it turns out this single number is the key to understanding Palantir's absolutely mind-bending success.
To get it, you first need to know about something in the software world called the Rule of 40. It's basically the gold standard for a healthy business. The idea is your revenue growth rate plus your profit margin should add up to more than 40%. It's a really tough bar to clear. So, what was Palantir's score? 127. That's not just beating the benchmark, that's playing an entirely different sport.
So the big question is, how on earth did they post a number like that? Well, let's dig into the incredible financial performance that's hiding behind that score.
Okay, check this out. Their 2025 fiscal year was an absolute monster. Overall revenue, up an incredible 56%. Their classic bread and butter, the US government business, grew a whopping 66%. But here's the real story, the absolute game changer. US commercial revenue shot up by 137%. They didn't just knock on the private sector's door, they kicked it off its hinges.
And what happens when you have that kind of explosive growth? It translates directly into market value. By early 2026, Palantir's market cap hit nearly $324 billion. That's not a fluke. That's the market waking up and realizing that something fundamental has changed, cementing Palantir's spot as a true tech heavyweight.
But here's the wild part, the paradox at the center of this whole story. For years, the thing that made Palantir so powerful was also seen as its greatest weakness, its fatal flaw. Their entire business model was widely considered to be, well, unscalable. So how did a supposedly flawed model lead to these kinds of unbelievable results? For the longest time, the big knock against Palantir was that it wasn't a real software company. Pundits called it a consultancy in disguise. The argument was pretty simple. They weren't selling scalable software. They were just selling the billable hours of their super expensive engineers. And that's a model that can't give you that classic hockey stick growth that investors crave. And at the very heart of that criticism was this role, the forward deployed engineer, or FDE. We're talking about elite top-tier software engineers that Palantir literally embeds with their clients. I mean, they're right there, on the ground, whether it's in a corporate boardroom or a military command center, tailoring the platform to solve very specific problems. And this slide just lays it out perfectly. On one side, you've got traditional software as a service, or SaaS. It's low-touch, it's self-service, and it's built to scale to millions of users with almost no human help. Then you have Palantir's model, which was the complete opposite. It's high-touch, it's totally custom, and, well, it looks impossible to scale. After all, you can't just copy and paste an elite human engineer. Or can you? This is where the story gets really interesting. Instead of ditching their hands-on model like everyone expected, Palantir did something brilliant. They decided to industrialize it. They made 3 huge strategic pivots that completely solved their scaling problem. And here they are, the 3 pillars of their new strategy: AIP Bootcamps, the AI FDE, and taking an ontology-first approach. Let's break down each one, because you'll see how they cleverly build on each other to create a real scaling machine. First off, they totally blew up how they bring on new customers. Forget those long, drawn-out, multi-month deployment projects. They replaced them with these super intense 5-day sprints they call AI Bootcamps. A client walks in on Monday, and by Friday, they walk out with a working, production-ready prototype running on their own live data. It just crushes the time it takes to see real value. Step 2 is where things get almost sci-fi level clever. They figured out how to productize their engineers. They built an AI agent, the AI FDE, that basically clones the knowledge and expertise of their best human engineers. Suddenly, customers could just use plain English to run the platform, ask complex questions, and solve problems that, before, would have needed a dedicated human expert on call. But here's the thing, none of that AI magic works in a vacuum. It needs the third piece, which is Palantir's real secret sauce, the ontology. So, before they do anything else, they build a complete digital twin of the client's business. It's a map that connects all the messy, technical data to real-world things we all understand, like boiler number 4 in a factory or flight 202 for an airline. This gives the AI crucial context, so its answers are actually useful, and most importantly, it doesn't just make stuff up.
So, okay, they figured out how to scale. That's a huge deal. But that's only half the puzzle, isn't it? The other big question is, once a customer starts using Palantir, why do they find it so incredibly hard to ever leave? The answer actually comes from a cool business theory that perfectly explains their insane customer loyalty.
It all comes down to an idea called value co-creation. See, with normal software, you buy a license, and that's where the value is. With Palantir, the value is created every single day, right there on the front lines, as their engineers and their software help clients solve real problems in real time. They literally become woven into the operational fabric of the company. It stops being a tool the client uses and becomes a capability they have together.
And if you want the hard data, the ultimate proof of this stickiness, here it is. Palantir's net dollar retention rate is 139%. Now what that means is that their existing customers didn't just stay, they actually spent 39% more the next year. That kind of loyalty and spending increase is almost unheard of, and it's a direct result of making themselves absolutely indispensable.
So there you have it. Palantir proved that their once unscalable model can in fact scale and make a ton of money. But now that they've solved their biggest historical problem, they're staring down the final billion-dollar question.
So I'll just leave you with this to think about. Is this new, supercharged FDE model truly sustainable for the long haul as they push towards their goal of $7.2 billion in revenue? Or is there a chance that this reliance on boots on the ground, even AI-powered ones, will eventually hit a wall, especially as they try to expand into more fragmented global markets? That's the big question that's going to define Palantir's entire next chapter.